Welcome to Technical Market Insights, ladies and gentlemen. It is Monday, November 20th, 2023. We are going to go over some of the biggest winners and biggest losers in the market and take a real quick glance at the market to see how it acted today. All right, so first on the list, ladies and gentlemen, is NanoString Technologies. Now, this was one of the first ones, came up on the biggest losers, but that is just insane to even look at or even talk about. It's a one penny company. It's worth basically nothing. The volume was 125,000, which is basically nothing. So yeah, anybody in that stock? Oh man, where do I start? Please just tune into the channel, listen. Look, you don't have to be in garbage like that. You're definitely throwing money away. Hopefully, you can get your money back. Sorry for your loss. So we went right on to the second biggest loser, which is NanoString Technologies. And this thing dropped 50%, ladies and gentlemen. That is a big drop to be in. And I feel sorry for you for your losses if you are. But ladies and gentlemen, I'm doing this channel to help keep people out of these losses and to help them try and grow and compound their profit. So one of our rules, if it's over the 200-day moving average, we are not in it. It crossed under the 200-day moving average up here. I want to say it's probably about a 90%, 98% loss in 2 years. So just sticking by that rule alone, you would have not been in that thing. And then it's a medical device company. So one of my rules, I do started off in the market trading single biotechs, and I will not touch them anymore. They're just too risky. I like to weigh my risk versus reward, and I do not like them trading single biotech companies. And as you'll see, they are always some of the biggest losers, also the biggest winners, but usually you end up in more losers than winners. All right, so that's two reasons. And also, I don't like trading them because for them to make money, they need sick people. Okay, so they almost want you to be sick so they can make money. So that is NanoString Technology. Let's take a look at the news and reasons not to be in it. That's my news. I don't know why I put that. All right. What am I doing here? So as far as NanoString Technologies, withdrawals Q4 full year outlook following jury verdict and patient dispute with 10x. So let's see here. Looks like some type of lawsuit issue. Oh yeah, so they're getting sued. So this is all about basically them not being happy with the lawsuit. I'm not sure. Yeah, it looks like it's getting downgraded. Price target to 140 from 6. So why would they ever have TD Cowen? A lot of these companies have price targets on some companies that they shouldn't even be recommending buying. They had a $6 price target on that. They should have told you when it couldn't hold the 200-day moving average not to even mess with it, but whatever. Each their own. Here's another one of the biggest losers, biotech company, healthcare sector. Pax Medica is down 44% today. That is a huge loss. And as you can see, this really hasn't been a winner. When this opened up as IPO, man, I hope nobody put their mortgage money in this at the 140 area because it is down to $1. That's crazy. So, ladies and gentlemen, be cautious on what you buy. You don't have to take big risks to make money in the market. You can be very strategic, very patient, and just continually grind out profits. That's what I do, so I know it can be done. This, I figured the next two we probably wouldn't. Well, it's got a decent chart, but 2-cent stock, no way we mess with that. Let's just jump right on down to this one. IMBS. another medical device company. I mean, look at this thing. Ladies and gentlemen, once again, company 250 area down to 30 cent. You can like a company's technology and you can like the thought process and the idea behind it, but let the stock develop a pattern on what the investors think. Okay? Follow the money, watch the behavior behind the money. As you can see, I mean, look at these pump and dumps. How many people got caught in these? Right? The $55 range is down to 3. How many people bought this just in February of this year at $25? And it's down to 30 cents. I mean, ladies and gentlemen, please stay away from those types of stocks. One of our biggest winners, hey, this is a biotech company. Like I said, they're usually the biggest winners and biggest losers. Look at this right here. Opened up at 10. It's down to 2. It's creeping on up. You might get some money back. I don't think there's any news out on this. So why I keep doing that? Yeah, the last news was 10:31. We didn't really look at the news on the rest of them, but here, we're about technicals here, not fundamentals. Otherwise, I could pull up news sites and we could just discuss news all day. But this is finally crossing back over the 200-day moving average. Still nothing I would touch with a 10-foot pole. I hope people make money in it. I don't want to see anybody lose money. I'm here to help people make money. My personal opinion, I wouldn't touch this. I mean, if you can get your money back out of it, I mean, for those that made money from here up, you know, it's ran 800%. That's a really good gain to lock in. All right, so if you got something that told you to get in here and you're up 500%, that's a really good gain to lock in. Okay. Now here, it may go back up to another 260% to $8. Okay, it may even go up even farther, but it's very, very risky. Okay, always weigh your risk versus reward. If you like your money and you want to keep it safe and keep it in good assets and don't want to gamble with it, I would probably lock in any gains you had here, any losses. If you want to try to hold till you get them back, but heck, you might not see them. So once again, biotech, one of our biggest winners of the day, definitely wouldn't be in it. And here's a software company, which, I mean, look at that chart. Geez, it dropped like a rock from the $200 area from the IPO all the way down to 30 cents. Ladies and gentlemen, this is something you should have never been in. And don't get me wrong, it did pop 75% today, but it shouldn't really impress nobody with its declines. I mean, it popped 30% that day, and it's 30% here, and it dropped 78% since. Ladies and gentlemen, be very, very careful out there. The market will take your money and never give it back if you don't know how to manage it. All right. This one, not over the 200-day, and has just been, as you can see, your 3 biggest winners in the overall market has been your biggest loser. So there's nothing to really toot your horn about. Just for curiosity, I clicked one down a little farther, and as you can see, didn't hold the 200-day. You should have stayed away, right? We only want winners in our portfolio because we want a winning portfolio. It's that simple. Let's check out the high cap 1000 and look at our biggest winners and losers there. All right, so we have a Full Truck Alliance Corp, technology sector, software applications. So they probably have some type of trucking software. Not a bullish chart. Got some consolidation there, and looks like it broke out. Probably had some earnings or something come out. Nothing I would be in, just for the fact it's not a bullish chart. Update. Full Truck Alliance shares up after company post high. So yeah, earnings came out. It popped. I don't think, there's much really to get excited about as far as that goes. I mean, unless this is, something about this company that I don't. But if you look at the chart, it's been a loser since it came out. Really struggles to hold the 200-day. right? Our companies we want to see stair stepping up. I say bullish charts. These are kind of what I'm looking at. Like, bullet nuclear energy, we're bullish on. BWXT, we've been bullish on since January. I'm saying to buy every pullback. Those are the kind of stock charts we like to see. And you will see many times over and over on this channel, especially as we get into January and we start trading a brokerage account very, very transparently. All right, let's get back into here. Celsius, we literally just spoke about this the other day. Uh, the chart is pretty bullish. I would like to have seen a higher high here. But yeah, we expected that to swing up. I did say check your PE. I'm not sure how much. I like the company overall. I like their drinks. They seem to be one of the healthiest energy drinks out there. So yeah, but I would definitely check the PE and the dividend, right? If this company isn't making money, I wouldn't have been in it. If it is and it pays, it's very rare I will buy a company. I mean, unless it's just a straight up trade, definitely not investment wise that doesn't pay a dividend. Just because, as far as I'm concerned, if a company, let's say somebody walked up to the streets and walked up to me in the street and asked me to buy and invest in their company, and I'm going to want paid from that, right? I want dividends. I want some type of return. I don't want to just give you my money and hope I get it back in 10 years. And that's how I look at this. Look, employees are getting paid. The CEO is getting paid. Everybody's getting paid. As far as I'm concerned, if you want public to raise money and your IPO to raise, your investors should get a piece of your return. As far as I'm concerned, I want some type of dividend and everything I own. All right. So possibly been in that. And that will, if you look at if it makes this previous high, you're talking about another 15% swing. From when we talked about it yesterday, you got a possible 25% swing. Let's just see if that was earnings related. Price target to 75 from 225 to reflect the stock split or whatever. Keeps outperform rating. So they still holding their outperform. They're just adjusting. Looks like it did have a 31 split. So it was probably about $150. Now it's 50 and they're calling $75 stock price. See, that wouldn't, I'm okay calling higher stock prices on bullish looking charts, companies that, let's see what their earnings, did they have an earnings lately? Geez, this is all 5 days ago. We really ain't had no news. That looks like just here is their earnings. Swings to Q3 earnings as revenue rise. That was 11.7. So if you look back here, 11.7 looks like they jumped up and closed down and then pulled back. Okay, Morgan Stanley has equal weight. I got 190 when it was probably about 150. So that was just an oversold bounce you got going on there. Coin has been ripping. That is one that I'm not big on this sector, but I mean, you consolidated like crazy here, then hit oversold. That could have easily been a good buying opportunity and be up 42% in 20 days. That's something you just planned on holding. Obviously, we would have locked in profit, right? We would have entered the oversold territory. And then I got overbought right there. That was a weak. So that's, you go over here, that's your resistance right there. Right there, it's weak resistance. May have been worth holding a day or two to see if you got a pop out of it, but we probably would have just locked in profit there and moved on with our life. At 23% in 8 days, so still not bad. Let's look at CRISPR just because this has always been a hot biotech stock, but look at it. Ladies and gentlemen, if Cathie Wood would have just sold this when it crossed under the 200 day and couldn't hold it, man, she would have saved some losses, almost 60%. I think she held it then. I don't know. I don't follow or pay too much attention to other people. I just know this has been a hot stock and her name's been attached to it. Man, when you add technicals, it's crazy the advantage you can get if you know what you're doing. All right, and ladies and gentlemen, this is really simple. All right, wrote a book and called it Simplified Profits. I've been doing this for 23 years. And trust me, I've tried about everything. I've spun my wheels for 15 years. You name it, I've tried it in the market. That's why I've developed a very simple strategic strategy that works for me and really could work for anybody. And that's what I'm doing this for. I'm doing this channel to help keep people from losing money. Hopefully they make money in the market. Not only that, but this is something, my son's going to be turning 18 in January. And this is how he's going to make his money work for him. So he's going to be watching these videos, and this brokerage, this transparent brokerage I'm going to be trading in January, he's going to be following along with me. Right, we might get him on the show, have a little co-hosting action going on. Anyway, so biotech, one of the biggest losers. Now that's been trending down. Nothing, I mean, don't get me wrong, it had a good little rally here. We'd like to see a few swings before we get in it after the 200-day, but it moved so much. Really doubt it was coming back. Regardless, this biotech, it's nothing we're touching. It's already started setting lower highs and lower lows. Dropped under the 200-day. Let's see if there's any news on it. After Q3 results, so it had, bad earnings report. I'm not touching it anyway, ladies and gentlemen. I just don't do biotech unless it's something like Lilly or something, not even Bristol Myers. So Icon Enterprise. Look at this chart. Definitely wouldn't have been in this turd. I mean, it's just been dropping and dropping. Has never been able to hold the 200-day. And dropped pretty hard underneath it. I mean, and what saddens me when I look at this and you hear me take a breath, so many people bought up here, thinking it's going to rally back up to 50, 60. People pumping them up on the internet. And then we're right back down to 16 bucks. And it will probably continue to go lower. Don't know nothing about the company, but I can tell you when the stock chart looks like crap, I got a bad management team, and we'll probably continue losing money and doing bad until they change something up. Maybe it's just got an overall bad product. There's another pharmaceutical company, Bristol Myers, crossed under the 200-day there. Definitely would have been a stay away. And as you can see, this is crossed under the 200-day, 35% in 11 months. Could have saved yourself from losing. Man, it has just been on a downward trend since. Dang. Let's see what kind of news there was, if any. Ooh, USD or USA FDA to miss December 16th deadline on Bristol Myers drug application. So, like they're having problems getting a drug application through the FDA. Ladies and gentlemen, one thing I don't like I said, about pharmaceutical companies, there's a lot of doctors coming out nowadays trying to tell people how to eat healthy and fasting and a lot of things coming to the forefront of healthcare, and it's really about just staying healthy. It's about eating healthy foods that's good for your gut, fasting periodically, or doing control, time restricted eating. So I don't like companies that have to make a living by people being sick. Uh, that's a good enough reason not to trade biotech. Okay, here I don't trade them because of the risk involved in them. They're mostly speculative. I just don't do it. Here's another one of the biggest losers. We would have already locked in profit from that. Possibly been in it. So you've had crossed under the 200-day, had a swing to the bottom Bollinger Band, didn't hold it, but it trended above it. That was a hard come down there, but if you were going to buy it, you're going to buy it when it's oversold. And we would have locked in profit up here, 12% in 22 days. Don't get me wrong, the overall market was oversold here, so there would have been a lot of other opportunity out there that we would have bought. Probably wouldn't have been in it anyway, but if we were, we would have been locking in profit in the overbought area. Take a quick look at the overall market, ladies and gentlemen. I remember we expected oil to pop, weekly charts getting oversold. Expect them to kind of bounce back up. Same with XOP. Right, weekly charts oversold. Wouldn't surprise me if they bounce back up. Now they could continue going down to this monthly tops out the oversold territory. But hey, nobody knows. Whatever you trade on though, right now the monthly is under the 200. Right, so wouldn't be trading on the monthly, be trading on the weekly. You definitely want to look at the monthly and the daily if you trade on them for a good entry. Right, and no matter what, always keep enough money to lower your cost average on your position. That's how you manage your position. If you go all the way in on a position, you got two choices: hold it out and hope for the best, cut your losses, or you average your position down and then take profit when it's time to take profit. Once again, as far as commodities, I don't trade them, and I only trade things I have a good 10-year outlook on. I really like the company for the next 10 years. And oil, it's not really just not that sector for me. I mean, heck, I think they're still, I don't know. Right now, my energy sector is nuclear energy. I feel like looking out 10 years ahead, I feel like nuclear is probably the cleanest and safest energy, especially when it comes to Brizo fuel, which is why we're a big fan of BWXT. Check out Project Peel. I don't want to keep saying that in every video, but I feel like I do. Trust me, my videos ain't moving the market, that's for sure. So we got SPY. So SPY, Dow Jones, Triple Q, and SMH. We're going to basically cover all. We'll cover Triple Q and SMH together. So their charts are, I mean, they gapped up, usually gap up, carry some momentum, carry some momentum, and they're at all-time highs, ladies and gentlemen. Look at this monthly chart on SMH. That's crazy. Come on, they are very heavy in the video. I say that wrong probably every time I say it. I'm sure it probably drives some people crazy, but whatever. What is their PE? Yeah, their PE is 111 right now. Price to book is 41, which is very overvalued. I don't know, ladies and gentlemen. I mean, if that something happens to that stock, SMH is going to crumble. But heck, that stock, I think it's already $1 trillion company. I have to look again. But I mean, it could break out and go higher. Who knows? People would throw their money and stuff like that. But eventually, if you haven't read The Intelligent Investor yet, definitely a good book to read. It's a book I try to kind of correlate my investing and trading. I just happen to add technicals into it, which gives you a huge advantage. So that is SMH and the triple Qs. Now, triple Qs aren't at an all-time high. At least I don't think. Yeah, I mean, they were a little higher back here on the monthly. Ladies and gentlemen, I mean, it is yes, I'm technically. This is your biggest gainer in the triple Qs today. It's been a huge loser. But anyway, back to this. So the weekly charts on these have bounced, right? We expect them to bounce. We called it weeks ago. Weekly charts have bounced. They are now overbought. Monthly charts, we've been expecting to pull back on that, but we've been expecting a green month due to the weekly chart. We have that now. The question is, that month looks so strong, it's broke out to new highs. Will this continue in the new high territory? That's $1 million question, ladies and gentlemen, that nobody knows. The only thing I know is I have a strategy that works. I'm not suffering from FOMO, which is the fear of missing out, because I have two accounts. I got a long-term trading account, or I'm sorry, long-term investing account, which I just buy everything I'm holding for the next 10 years when it's oversold. I just continue to add to those positions. And then I have a trading account. My trading account will definitely be in cash in the overbought territory, and I will patiently wait. It might be 18 days, it might be 30 days, it might be 45 days, it might be 90 days. I mean, I've seen swings take as long as 2 weeks to 2.5 months, but I will wait for the market to pull back, and that's when my trading account will go to work. All right, my long-term account will just continue to profit if it goes up. Now, the account we'll be doing in January will be a hybrid account, so we'll be doing both. We'll have some long-term stocks in there. We'll have some trading going on. Take a real quick look at XPY. It's overbought. Now, this monthly chart, we call that crazy support right there, expecting XPY to go up. And if you would have gotten that when we called it, you've been up 32% for the month on LABU because we trade leveraged ETFs. So that is the overall of the market. Right now, the weekly charts have bounced in the Dow. They've bounced in SPY, all into the overbought area, and the daily charts in the overbought area. And the monthly charts, they're pretty much overbought as well. So we are being very, very cautious and patient, waiting, expecting the market to pull back as it swings like they always do, ladies and gentlemen. Got any questions, any feedback, post below. Make sure you subscribe, and you should probably turn on your notifications, ladies and gentlemen. Have a good week and a great Thanksgiving. I don't talk to you before then.